Hello everyone, and welcome. I'm Ava, and you're watching Ava Talks Crypto. For today's headlines, IMF acknowledges that banning cryptocurrencies is not a sustainable solution. US Supreme Court ruled in favor of Coinbase in its first crypto ruling. Binance was ordered to halt services in Belgium. Bitcoin hits one-year high amid BlackRock's spot Bitcoin ETF application. Forbes declares $15 trillion quake targeted at XRP and other altcoins. For our first-time viewers, Ava Talks Crypto is a channel dedicated to delivering all the latest news happening in the crypto space. Our channel also uploads daily market report videos that cover an in-depth analysis of the market movements for Bitcoin, Ethereum, and trending altcoins. Before we begin, please support our channel by giving this video a like and subscribing. Doing these simple things goes a long way, and it also encourages us to upload more quality content on the crypto market for you to enjoy. Be one of the first to watch our videos by hitting that bell icon to get notifications as soon as we upload new videos. Also, let us know what you think by leaving a comment below. Don't forget to share our videos with your friends who may be interested. Now, let's discuss the headlines. Let's now shift our focus to a notable news story making headlines. The International Monetary Fund, or IMF, has released a report on the growing interest in central bank digital currencies, or CBDCs. The report also mentions that banning cryptocurrencies is not a sustainable solution. The IMF recognizes the benefits of CBDCs, noting that they could lower the cost of remittances and even improve financial inclusion. It also stated that cryptocurrencies need to be regulated in order for digital assets to remain part of the payment system. The report paints a positive picture of the crypto industry and says that outright banning crypto is not effective or beneficial. In a statement, an IMF spokesperson said that while a few countries have completely banned crypto assets given their high risk, this approach may not be effective in the long run. The United Nations Financial Agency, which is working on a global CBDC platform, stated that regions should focus on addressing the drivers of crypto demand instead of banning it. Additionally, demand includes citizens' unmet digital payment needs and improving transparency by recording crypto transactions in national statistics. Research done by the IMF revealed that 4 Latin American countries, namely Colombia, Brazil, Argentina, and Ecuador, ranked among the top 20 countries in the global adoption of crypto assets in 2022. Countries that have a pro-crypto stance are actively seeking the benefits that digital assets have to offer. Among the benefits are protection against uncertain domestic macroeconomic conditions and the circumvention of capital controls. Another benefit is that crypto assets provide improved financial inclusion for populations that have no access to traditional banking. Cryptocurrencies also offer cheaper and faster payments and stronger competition. The IMF also acknowledged the risks that come with crypto and advocated for robust regulations for this type of asset class. In another statement from the IMF, if well designed, CBDCs can strengthen the usability, efficiency, and resilience of payment systems. It will also increase financial inclusion among the general population. The report from the IMF is in stark contrast to the outlook in the United States, where the government appears to be hell-bent on quashing the crypto industry in its entirety. Up next, the United States Supreme Court ruled in favor of Coinbase in its first-ever opinion on a cryptocurrency case. The plaintiffs in the class action lawsuits alleged that Coinbase failed to provide proper relief after users lost money. Additionally, the lawsuit stated that Coinbase was allegedly engaged in deceptive advertising. Coinbase countered by asking the district courts overseeing the cases to dismiss them on the grounds that the users signed an agreement upon creating their accounts, which states that such disputes would be handled through arbitration in lieu of lawsuits. This ruling marks the US Supreme Court's first cryptocurrency-related filing. The California district courts will now kick these cases into arbitration, which will be less costly for companies than arguing or settling cases through the courts. While this is a win for Coinbase, it would also have an effect throughout the crypto industry. In the court's opinion, when creating a Coinbase account, individuals agree to the terms and conditions stated in Coinbase's user agreement. Included in the agreement is an arbitration provision, which states that disputes arising under the agreement should be resolved through binding arbitration. After California's district courts denied the request for arbitration in the cases, Coinbase filed appeals, requesting a stay while the appeals were handled. The courts were inclined to continue the civil cases in spite of the appeals made by the company. The Supreme Court's decision was made on June 23 and granted the stays. The decision also allowed Coinbase's appeal to go through before the class action suits could continue. At this time, it's not yet clear how similar cases against cryptocurrency companies will be affected. There's also no indication that this particular case will affect the SEC's ongoing legal actions against Coinbase. As we explore the transformative power of cryptocurrencies, let's shift gears and discover another intriguing aspect of this ever-evolving market. Binance is accused of serving Belgian customers from countries outside the European Economic Area, which is a violation of the law, according to the Financial Services and Markets Authority. As a result, Belgium's top market regulator is ordering Binance to immediately cease serving local customers. The Financial Services and Markets Authority, or FSMA, stated that Binance is offering and providing exchange services in Belgium between virtual and legal currencies, as well as custody wallet services from countries that are not members of the European Economic Area. According to authorities, this action by Binance is in violation of a prohibition. Binance is currently in a legal battle against the SEC after it was alleged that the company violated securities laws. The crypto firm is also revealed to be the subject of an ongoing investigation by the French authorities. Binance has pulled out of European Economic Area markets like the Netherlands and Cyprus due to regulatory issues. A Binance spokesperson stated that the company is disappointed to learn that the FSMA has made a decision despite their ongoing conversations. Binance is reviewing the details of their notice and will continue to work collaboratively with regulators in Belgium and around the world to comply with their obligations. Up next, we have Bitcoin hitting a one-year high on Friday, capping a week of gains helped by BlackRock's plans to create a spot Bitcoin ETF. Despite the heightened U.S. regulatory scrutiny of the digital asset sector, the crypto market has seen huge gains this past week. BlackRock is the world's biggest asset manager. Last week, the company filed to launch iShares Bitcoin Trust, which is an ETF that would have Coinbase custody as its custodian. This move from BlackRock also offers institutional investors exposure to Bitcoin. Since BlackRock's filing, Bitcoin has gained nearly 25% in value. It was trading as high as $31,458 on last week Friday, which is the highest level since June 7, 2022. According to analysts, BlackRock, Fidelity, Citadel, and Charles Schwab throwing their hats into the crypto ring is hugely significant. It shows that large institutions are very serious about investing in the crypto space, despite the recent regulatory crackdown happening in the United States. Ethereum also experienced a rise last week and was up 1.63%. It was trading at $1,903.20 on Friday last week. Some observers are saying that the SEC crackdown may be good for Bitcoin, which is generally seen as a commodity rather than a security. To wrap things up, Forbes states that there's an impending $15 trillion quake targeted at XRP and other altcoins. Fueled by BlackRock's interest in the Bitcoin ETF, it will potentially reshape the demand for XRP. Forbes magazine is alerting investors that there will be an unprecedented shift hurtling towards the crypto market, with XRP at its epicenter. Last week, BlackRock, the world's largest asset manager, announced its intention to plunge deeper into the crypto space. BlackRock has assets worth $10 trillion under management and has filed for a spot Bitcoin ETF with the SEC. This move signals an immense demand for Bitcoin exposure from its prestigious clientele and would naturally ignite a domino effect, leading to a rally behind various cryptocurrencies. XRP is noted to be one of those cryptocurrencies that will greatly benefit from BlackRock's filing. Additionally, Forbes also noted that the revelation from Laser Digital, a digital asset subsidiary of banking giant Nomura, also contributed to the coming surge. In its recent survey of professional investors, it revealed that there's an overwhelming desire to invest in cryptocurrencies, such as XRP. Additionally, 96% of these financial experts expressed keen interest in entering the crypto space. They cited the potential of digital assets to diversify portfolios and revolutionize investment management. The majority of the respondents in the survey also displayed an optimistic outlook for certain digital assets, such as Bitcoin, Ethereum, and XRP. Most respondents also confirmed that they or their clients were actively considering investing in crypto. Other prominent financial institutions also expressed interest in a crypto-based ETF. Recently, WisdomTree and Invesco also submitted applications for a Bitcoin ETF. These are all the latest news stories we have for you today. Don't forget to check out our daily market report videos. Again, this is Ava, and you've just watched Ava Talks Crypto. Thank you, and have a great day.